I've just bought shares in small cap stock CMC Markets PLC to test out an improved method of fundamental analysis for stock picking that I've been studying, in what should be a vastly superior way of picking stocks to what we've used previously.
Our plan is to steadily invest and grow a portfolio of market-beating stocks alongside our ETF and property portfolios. The stock Ben bought, CMC Markets, is a FTSE SmallCap growth stock that has all the hallmarks of a company that is going places.
In this video, we'll walk you through the research involved in picking this stock out of the thousands available, every test it had to pass through in order to interest me, my long-term plan for this stock, and what happened during the buying process. Let's check it out.
Welcome to Unshackled.com, the investment and finance channel and website that sets you and your finances free.
That was Andy and I'm Ben, and if you like what we say, hit the like button and click subscribe. Finding the perfect stock. There are tens of thousands of stocks available for us to buy as investors. When we're looking to buy a stock, we usually don't start out with a particular company in mind. Rather, we let data and research drive us towards a single stock by applying filters to the market.
Step 1. Getting a shortlist. We want to narrow down the market to just a handful of stocks that look good right now. We're using Stockopedia here to enter some sensible filters. These are just a set of filters built in that attempt to mirror the logic of trading guru Robbie Burns from The Naked Trader, which was as good as any place to start.
The filter spat out 3 stocks. The top one, CMCX, was the one I ended up buying due to step 2, the research phase. On the stock's front page on Stockopedia, we can see that it's been given a stock rank of 99 out of 100, and the 3 scores above it go into a bit more detail.
We want these to be above 60, or at least have 2 really high ones if one is going to be lower. Scrolling down this summary page, there's a ton of info, and let's pick out the main bits.
I have a spreadsheet, the template of which we'll share with you via a link below, which helps me to organise my thinking on a stock purchase.
We start by noting down what we know about the company. If we buy, we want a record to refer back against for why we bought it in the first place, to help us when we decide to sell. Here's the ticker, the name of the company, the main index, and the year end. Next, we have the market cap and the profit, which allow us to calculate the PE ratio, which for CMC is 10.1.
In our shortlist filters, we hadn't allowed the PE ratio to be higher than 20. That's the number of years that it would take you to get your investment capital back through profits. By analogy, if we buy an investment property, we want to know how much profit we'll make from the rent each year before we'll commit to paying a certain price for the house. The same should be true when you're buying stocks.
Retail investor favourite, Tesla, for instance, has a PE ratio of 810, a little higher than CMC's 10.1. It would take 810 years at current profits to make your money back as a Tesla shareholder. Of course, the assumption investors have with Tesla is that profits will massively increase sometime soon. That's one strategy, but our strategy here is picking stocks based on a proven record.
Next up is dividends and then cash and debt. CMC has a huge cash buffer, which we hope they'll use to buy something interesting, like a smaller rival or some new technology for their platform. Their debt is tiny compared to their cash, making a negative net debt overall, which means it has more cash than debt. Its risk of bankruptcy is therefore limited.
We can see by looking at this stock's chart from last year that the price likely found support around the 270 mark and resistance at around the 360 mark. This is the likely range that the stock could move within the near term. We note these down here for later. The numbers look really good with this stock, but numbers aren't everything. Is it a good company?
Checklist. In the spreadsheet, I put together a checklist that I used for this purchase, which I'll be using going forwards. First, I wanted to make sure I knew what they do. They make money from providing CFD trading and spread betting services, a sector we know reasonably well.
We know the sector has a positive outlook because anecdotally everyone seems to love investing or gambling with CFDs and speculative spread bets, despite the warnings on this channel. But Ben flagged up here in orange that there is a risk to spread betting companies that the law might change at any point, making spread betting taxable where currently it is tax-free, or the introduction of further restrictions on the use of these products which could damage CMC's margins.
I discussed with Andy the likelihood of whether we thought the sector could even be outlawed, like CFDs are in the US. We concluded that we can't see this happening anytime soon. With Brexit around the corner and coronavirus laying waste to the economy, why would the UK shoot itself in the foot by banning a very profitable and globally competitive arm of its financial services sector? Based on good news stories recently, the company's own outlook is positive. Its profits are moving in the right direction and it has good revenue from sales.
We make a note that we understand the competition and check Trustpilot to see what its customers think, a 4.3 rating of excellent. We make another negative note at this point that there are low barriers to entry. Banks or other financial institutions could step in and copy what CMC do. This is not serious enough to red flag it, just orange.
Next, we look at a bunch of questions including checking the news for anything bad, signs that its dividend is rising, which is a good sign of financial health, and that the Donald hasn't tweeted anything recently about the company's sector that might make the share price a bit wobbly. Only then do we look at what most other people would start with: pundit and broker recommendations. Are other people saying that it's a stock worth buying?
If they agree with us, it doesn't really tell us anything, but if they're saying it's a dud, then perhaps we should look at our research again. Either way, don't take what other people are saying as a reason to buy a stock. Always do your own research.
Next, we check the chart and look if now is a particularly interesting time to buy. The stock price is moving generally upwards, a good sign of a healthy company. And after the June results came out showing strong performance, the price found a new baseline of support around 270 pence. It has since peaked around 360, called resistance, and then fell to where I bought in at 314 pence.
Step 3, the plan. When you buy a stock, you need a plan. That plan should involve what price you'd be willing to sell at for a profit, plus the price you'd sell at to prevent massive losses if it all went wrong, and what you'd do if any of the risks that you flagged up in your research came to pass.
I bought in at 314 pence, and my initial plan is to consider selling if it hits 360, though I would hope to be convinced from future research that it's worth holding past this price. I chose this because I expect the stock to grow based on the research I did, but it hit resistance recently at 360. I'm being careful as I'm new to using these methods of fundamental analysis, so I'm choosing a target at the lower end of what's possible.
You also need a plan to bail out quickly if your stock goes tits up. Stop losses are a feature some platforms provide which automatically sell your stock if the market price drops below a price set by you, called the stop loss price.
After buying this stock at 314 pence, I set my stop loss at 270 pence, the support level from our chart. This is also around 15% lower than the price I bought at. I could also choose to adjust the level of my stop loss price as the stock's price goes up.
If the price hit the sell target of 360, then instead of selling, you might decide to change the stop loss from 270 to maybe 320, aiming to lock in some profits while allowing the price to climb further. If it's still a good stock at that point, it might be sensible to aim for higher profits while defending the rear with stop losses.
Following the example of the naked trader, whose filter we used initially at the start on Stockopedia to get our shortlist, I set up an alert on my phone for if the stock's price were to fall by 5%, what he calls the get out quick price. If the price falls to this in the next few days, it may be a sign that I was wrong about the stock, and I would strongly consider selling at that point rather than waiting for my stop loss insurance policy to kick in at a 15% loss.
Your plan must also consider what you'd do if the potential risk that you flagged in your research actually happened. The biggest risk for CMC Markets is regulatory. That is, if its product, spread betting, became taxable, which it currently isn't.
In this scenario, I expect the stock price would plummet and my stop loss would be activated, selling the shares. But as I believe in the fundamentals of this company based on my research, if that happened, the market would likely panic and lower the price too much, making it a bargain. Hopefully my stop loss would allow me to avoid much of a fall, at which point I might buy in again after a new support level had been established.
Going forward, if you want to try Stockopedia for free and play around with researching companies like we have shown here, we have a link on the Money Unshackled offers page below to a 14-day free trial, followed by 25% off your subscription if you decide to stay with them.
We each have 3 markets, the UK, the US and European markets included in our subscriptions, worth £600 full price. So, if you used our link, you'd be saving £150 if you wanted the same setup as us. We'll be making more trades like this in the weeks and months ahead and keeping you posted on progress where possible.
Question of the day. Has this helped you with picking stocks? And are you tempted to invest in CMC Markets yourself? Let us know in the comment section. Thanks for watching. On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is MoneyUnshackled.com. See you next time.